All right. Good morning, everyone. Welcome. We're going to go into the charts and we're going to do the live stream. So I typically just kind of lead off with this, just kind of an intro in terms of where we ended the week and give you guys my thoughts on the market. And then we get into subscriber stock picks. So hopefully, if you guys are new, we're going to cover charts that you guys want me to look at, and I usually go for about an hour. Sometimes we pull some really good trade ideas out of these live streams for the next week, so we'll hopefully be looking for that. And we're going to just get right into it. So the week, the market basically closed down on Friday. I'm looking at the SPY chart here, just kind of this weekly chart, just to see kind of where we're at. We pretty much closed at the 200-day moving average. And if I look at the daily chart here, it is, it's below the 200-day moving average. So we'll see. The weekly doesn't quite show us where we're going in the near term, but the daily I think is a little bit more clear, at least from my perspective. And then guys, before I get started, let me know if my audio is okay. All right, I do want to do a quick audio check. So before I get too far into it, let me know if the audio is good. And then also for anybody that's new, that hasn't taken the course, I mean, obviously I benefit from that, but I also highly suggest you guys take it. It is a $99 course and it goes through all these concepts. I've heard from a lot of people that it's a very good course and it's a very valuable course. I don't pretend to be the best presenter of information. I'm not the best talker or whatever. But at the end of the day, I do think the information that I'm giving in the course is very valuable. And I'm not really here for entertainment. I'm here to give you guys knowledge. So think of me like a boring ass seminar in college, but one that has the potential to pay you a bunch of money. All right. So check that out. Link in the description below of all my videos, and then we'll get into it. So the SPY here, 3 days we tried to beat the 200. There's day one, we failed. Day two, they did close it above. They managed to close, but day three, and the most important day, given that it was the end of the week, we closed just slightly below the 200-day moving average. Okay, so that was a battle that was going on last week. I kind of pointed that out in my last video, how it looked like we were going to battle a little bit. And, basically a battle typically is just when you've got some short-term levels like this, it'll look like that, and you're just kind of bouncing between them. All right, the buyers and the sellers are battling it out. So that is what was going on Friday, but we closed the week at the end of the you get to keep the course, guys. It's when you pay for it, you have access to the videos. It's not an active, I don't run an active trading channel. I don't run a live stream throughout the day. I'm not really trying to get you guys to join like a chat room or anything like that. I don't want to dedicate my time like that for right now, but the course, you're buying the content. So, all right, sorry guys, back into what I was saying. The below the 200-day. All right, that's the main takeaway. All right, we closed the week below the 200-day, and that's all I got, on the SPY. I'm not really that interested right now in the SPY, except for the fact that this is when when the SPY sells off 20%, you'll hear the headlines, and everybody will be whining and crying about how the market's down a bunch. They pretty much only are going to do that when the SPY does that. So that's why we watch the SPY. But it's not that tradable just because you've got all these defensive stocks. The XLV, which is your healthcare stocks. You've got consumer staples. You've got all these defensive plays. The utilities are in there, oil stocks. And those are all, doing pretty decent. So we want to short the weak areas of the market. And the weak area that I've at least determined for so far this year, which has been accurate, is tech. So I'm looking at Qs. And I'm really interested in shorting tech. And I am short tech. But the reason why I keep kind of trying to hammer that home is the market leaders, the big FANG stocks. I really want to see those start to come down. They're starting to show weakness to me. we've had a rally, which I am determining a bear market rally, and we sold off pretty much last week. So again, if anybody's been following me, I talked about getting short right here on this day, right up that pop above the 200-day moving average. And maybe it's a little hard to see. Let me zoom in. See if, oh, sorry guys. I got lines going all over the place. I'm trying to zoom in here right there. All right, there it is. And your 200-day moving average, let me get rid of my circle. There's your 200-day, which was your simple moving average, about 368.75. And on this day, when we popped above, I said, okay, this is likely as far as this rally is going to go. I didn't know for sure because nobody knows at the moment in time, but I did point out that, okay, I don't expect this market to go any higher, any major amount higher. Yeah, it could pop around. When we were here, I thought, okay, we could chop around a little bit, maybe do small little pops, but I don't expect us to just continue to trend higher when we were right here. All right, and I go back and watch the video. If you don't, believe me, March 29th, just rewatch it if you want. And this is where I started to short, and then sure enough, yeah, we've had the sell-off. Now, the reason why I like shorting Qs is from this move down to here, we're down about 6%. All right, if I go back to the SPY, stopped rallying right there, and that one's down about 3%. So like half. So yeah, we look to short the momentum movers, which is tech. All right, so where do we go next week? I just want to talk through that real quick. The thing is, like Friday, yeah, they sold it off into the close and make it rid of it. I'm just cleaning up my charts as they go along from the week. But yeah, we pretty much closed at the lows, of the week. So I'm looking for more downside. Going back to the daily, we do have this gap right here. It's about 360. And sorry, I'm flipping around, guys, but this is how my brain works. There's the gap right there, 360. So we could fill the gap, all right? But I'm still looking for us to go lower. Now, a lot of what I teach in my analysis course and really on these channels is really how to get positioned in the trades at the key levels so that the trade, when it starts working, you've got a really good position on it. But as the trade starts to work, it becomes a little less obvious. So what we do is as it starts to fall and when the trade's working, this was the area we wanted to get position. Now as it's starting to work, it's a little harder to call every single little zig and zag. I try to do it, I try to put out videos calling the zigs and zags, but ultimately that's more difficult. The easier thing, and not by no means is it guaranteed, but the easier way to call it is just call kind of the final target where I think we're going to end up. All right, and that's down here at about 299, 300 area. All right, if I'm right that we're entering a bear market, then this is your first leg down. This is your first bear market rally, and we continue lower. All right. Now it's not going to go straight down though. Right, we're going to bounce along the way, and I don't know exactly where those bounces are, but what we try to do is we look for support levels where the likelihood of a bounce, exists, and then that's probably where you're going to get bounces at. So obviously you can see right here, here's the key level, 242.65, right in there. That was resistance. You had some consolidation reaction right there. You held support right here, and then, kind of got choppy through here. But we have several reactions in the past that give us an indication that we'll likely get a reaction there. Okay, so I'll just extend that out, and I've got it marked. We just extend it out. So right there, 342.50 is likely a reaction. And that's on the daily chart. On the hourly chart, yeah, it's, I think it's just right down there. So that's another 2% down, all right, before we get a bounce, a reaction. Whether it's a big reaction, I don't know. And I'm not really that interested in gaming a lot of these reactions. I do tend to kind of try to catch a couple of these longs and these little bounces, but at the end of the day, go back to the bigger picture, and I think we've had our bear market rally and we're starting the bear market. So it's probably, if you're not able to actively trade, then it makes sense to probably just let this thing do what it wants to do on the way down. All right, this is the area where I'm more interested in really looking for a sizable bounce or another, another bear market rally down there. All right. Moving on that one. So let's go to small caps. Sipping coffee as we go. Hope you guys are having a good Saturday morning. And we will keep going. All right, small caps. So again, the key takeaway here, and guys, as the week goes on, and if you're looking at, if you're looking at the 1 minute charts, if you're actively trading, I use Lightspeed Trader. It's a desktop application. It gives me kind of instant access to the to the exchanges, so I can execute my trades very quickly. But so I'm always in the charts. I'm looking at the 1 minutes and all that. But the 1 minutes is it's the Wild West. You've got moves going against you and down, and you look at that and you get too sucked into the 1 minute chart or the 5 minute chart, and you can lose your focus and you really get shaken out of a lot of trades. So what I do as a tool, it's a mental tool, and it's something that I've had to learn through experience on how to manage emotions. All right, in my course, I don't teach you exactly how to manage emotions because everyone has different ranges of emotions, but trading is emotions. All right, it's fear and greed. All right, and so one tool to help manage your emotions is to go back to your charts, get out of your trading platform or whatever you're trading, go back to your charts. I use TradingView, wherever you have your markups at, and scale back on your time frames. Look at your dailies, look at your weeklies. All right, dailies is my preferred just because it's acute enough. It gives me it's precision enough. I can get an accurate read on where we're going near term, and so daily is my preferred, but weekly will give you the big trend. All right, and so your big daily chart here on IWM is this big sideways pattern for over a year. Recognize what the bulls thought this was. All right, so here's your March 2020 lows, and here's your big strong Fed-induced rally. All right, then we topped out. IWM topped out for about a year. And you had all kinds of people taking positions in here. These are trades. So you had longs and shorts, essentially. But, this was a big battleground of a year long. Now, the bulls thought this was a bear flag, or a bull flag, all right? It wasn't in my, I never thought it was. But look, there's your flag. I heard other YouTubers talk about it. There's your flag pole, and there's your flag, and they were looking for, boom, off to the races. Continuation to the upside. All right, I never thought that, but recognize what the bulls thought that was, all right, because that's going to help us analyze the charts. Then you get the breakout right there, all right. I love this chart, this IWM chart, because it's just so clean. You get the bullish breakout, all right. If you're a bull and you were buying stocks maybe at support here or just, retail, they just buy whenever. Their 401k money, they're just buying all the time. You see this bullish breakout, you're like, all right, here we go, off to the races. I was right. This is a bull flag. All right, that's exactly what they thought at this moment in time. And that's only if you were watching price. All right, I always point this out, but if you were looking at other indicators like the ones I teach, momentum indicators, you had big negative divergence on the PPO and the RSI telling you that this breakout had a high probability of failing. Not guaranteed, but high probability. Okay, so then I don't take these breakouts. If I have a breakout with a bearish divergence, I'm not interested in the breakout. If anything, I'd rather take a back test, but I don't take those. I typically let those play out because the probability says that you're gonna bust out. And then sure enough, boom, break back within the range. Once you broke back within the range, and I talked about this on my channel back during this time, but I said, look, and that's why I have it circled, because this is when I was pointing it out. But I said, look, we broke back within the range. Now the probability changes that this was a bull trap, and we're going to head down to the bottom of the range. And sure enough, we did. I circled that one, said, all right, we're at the bottom of the range. And then I put higher probability that we would actually break the range. And I didn't know when, but I was waiting for that break of the range. There's the break of the range there. And now that's major resistance, all right? So you recovered it a little bit here. Make the bulls think, oh, okay, that's it. We're back, we're going to go back into the range. Boom, rejection, down she goes. Okay? All selling, just recognize that. It's all selling. You broke above the range. making that was a stop raid / bull trap, whatever you want to, whichever side you're on, and then boom, all selling ever, pretty much ever since. So it doesn't, we still need to take out the lows to confirm this, bear market basically. But and the lows right now, I see them down at this 188.24. So I'm thinking we're heading down there again. And here's the thing, we don't really have any business being back down there, so it's very likely it's going to break. Because look, we recovered this range here. At this moment in time, who would have thought we'd be down at the lows down here? No, the bulls were like, dude, we're good, everything's great, making money, happy. All right, not anymore, but now they're questioning their position, but maybe they're not exiting. They still got these lows. They're likely going to try to fight there. You take these lows out, and it's obvious to all that you're entering a bear market, okay? And that's when you see the big move, all right? That's when it's obvious to all, then the bulls will capitulate and they'll panic sell, and shorts, the late to the party shorts and the momentum traders, they'll all pile in, and that's when we're going to get a swift move down. Now, right now, I'm just targeting this 170 area. So I don't know, could break below that. But right now, we're going to target that 170 area. And because that area is former resistance here, former resistance there, resistance. And then, look, we gapped kind of above that range right there. So it's a pivot area. So I like that as the target. We have even higher probability now that we're going to hit that. And obviously, when we break the lows, we'll have about as high of a probability of hitting this target as you can get. All right. But of course, it's not the time to short, right? We don't want to short after we break the lows and we're coming close to our target. From there it'll be maybe 7.5%, 5 to 7.5%. All right. We wanted to short on really the best shorting. Maybe you don't want to short right here when we recover, but the following day, the rejection, that would be your sell signal. You'd want to short there. So if you took the short at the end of the day right there, and I'm just trying to go at the end of the day. I'm just saying, look, I'm not anticipating you guys are able to catch it right when it starts breaking the level. But, all right, that's a 16.5% gain. Very, very good risk-reward ratio. I teach those concepts, risk-reward ratio. You don't want to take trades that are 1-to-1. You don't want to risk $1 to make $1, okay? Because then you have to be right. You got to be right more than 50% of the time with commission. And that's a difficult thing to do. So rather what we want to do is take trades that have risk $1 to make $3, risk $1 to make $5. The better the ratio, the better you'll do over the long term. All right. So the risk reward ratio, because if we start to recover, the 200-day was up here, you'd probably want to stop out above the 200-day, and that would maybe be your risk, and then your reward is all the way down here. So again, your risk would be from when you took the trade, maybe a 4.5%, 5% to the upside of a potential loss, and then your gain, was maybe roughly 15. So, 3-to-1. All right. So I teach these concepts in my course. Check that out, guys. Okay, so there's IWM. Now I will. Let me go through some of these others. I cover gold a lot. There's not a whole lot here, so this will be fast. Guys, I'm undecided on gold, at least gold bullion, in terms of the short-term move. It could go down. This is the buy zone here, or it could just go up. All right, I don't know. So rather than try to guess, what I prefer to do is just take a position in. I trade the miners. I don't usually trade the metal. But let me grab a sip of coffee. But so I have a position, all right, and I'm looking to add to that position if we come down. Again, gold rolling back out to the bigger picture is by the dip. Here's your bull trend going back to 2018. Support all along that trend. If you guys can't find this trend, use logarithmic charting, all right? In TradingView, it's right down there, all right? Right down there, right there, log, all right? Logarithmic trading is key for analyzing charts and actually, trading like the professionals. Linear trading is, you might as well just watch Jim Cramer if you're going to use linear charts. All right. So here is your support line that's the bull trend. Okay. Big blow off top here, back here in gold. This is where the Robinhood traders. I saw that like GLD, maybe GDX GLD was one of their top positions during this time. All right, Robinhood traders, they're gamblers basically. Not all of them, but you know, a lot of them. So they just buy things that are going up and hope that they continue to go up. And I think they've been conditioned based because of the 2020 rally and everything that they just think that that's how markets always are. But a lot of them have been wrecked out pretty bad on a lot of those momentum stocks. Okay, so there's your blow off top, and then we had this big long correction. All right, I wasn't long the miners through here. I didn't short the miners, but I just got out of my long positions, and I started buying the miners right there. All right, that was my first entry there. And then I added to them right here. And then I've been adding to the miners every tag of support along the way. All right. As we consolidated, all right, boom, breakout. So I'm not adding right now, but if we pull back to support, boom, we add again. Okay. So that's how you do that. That's how you trend trade and swing trade. Again, why was I adding at support? Why did I like it to the long side versus the short side? Well, it comes back to the bullish divergence. All right. There is this one, that wasn't so much of a divergence, but definitely right here. You had a big whipsaw down, hit that low. That was a equal low in price from the former low, and yet the momentum started to move up. All right, I was seeing, and there it is right there. So that bullish divergence, momentum is moving higher. Price was, right here, price was making an equal low. That was a divergent low, and that's the only divergent low you've really had because price has essentially moved up ever since. Okay, so that was your signal and probably the best buying opportunity. And we continue to wedge higher. And now we have a breakout. So if we back test, great. If we don't, it should continue higher. All right, that was longer than expected, but that was gold. All right, guys, I am going to start getting into your stock picks. I've kind of covered what I think is going on. Just a real quick fundamental overview. The Fed, again, my thesis for a lot of my trade ideas that I keep putting out is the fact that I think the Fed is trying to walk the market down. I don't think it's I don't think it's hidden. I don't think it's a mystery. I think a lot of people think that they're trying to have a soft landing, but I've been talking about that. I think they're trying to walk the market down without allowing it to crash. So they want to continue to put pressure on the market as it rallies. And they want to walk it down without getting too crazy. So as you rally, it's a sell the rip market. That's why I think we're entering a bear market as well. You've got these rallies that the Fed's going to start putting hawkish talk into those rallies. All right. The charts tell me bear market and the fundamentals are telling me that as well. But don't expect the market to just completely crash unless the Fed loses control, which is always a possibility. Again, I want to be shorting this market and selling the rips. Because if the Fed loses control, at least we'll be on the right side of that, right? We don't want to be long and the Fed loses control. All right, we'd rather be short and they lose control, and which I think there's a good probability that'll happen, but not yet. All right, I do think we're still heading down to those targets, and then we'll see. We'll probably get a rally there, and then we'll see what happens. All right. So that's it on that. We're going to get right into the charts, guys. I'm going to start at the top. Please try to just limit your stock picks to just a couple, one or two, so I can have an opportunity to go through some of these, and we will start looking at them. PSA. Bioscience, Penny. Sorry, this is the wrong one. PSA. I was like, all right, this is public storage, likely a dividend play. Let me look here. Is this a dividend payer? Yeah, it is. Okay, so this is this is like a REIT, basically, public storage. So treat this like a REIT. But rising interest rates, I think, can be bearish for REITs. So here, let me just mark this out. There's your trend, roughly. It's, you kind of have to do a little bit of that. So, and then you could probably tighten it up on the hourly, but something right in there about. Okay, so there again, this is how this is why logarithmic scaling works. If I turn the log off, I can't make a trend line. It's just a big mess. You just draw, you can't do it. So you need log to get that. All right. There's the COVID lows, support all through there. Support, there's 2 tags of support. Okay, so clean, crisp trend line. Yeah, no, I don't. This is not a short, at least not in my opinion. Not yet, at least. Yes, there is some negative divergence that is there. It's, look, right here on the PPO. Let me zoom in on this one. Just to double check. Look, you're making kind of new highs and you're on the fast line and you're already pointed up. You're pointed straight up. So not good enough from my perspective to worry about it. Bullish trend. Yeah, you know, not enough evidence here. I mean, you could, you know, there's potential divergence that started way back here that's been building, but we might be burning through it. So a little more evidence. And obviously, there's a lot of work to do. You still have to break the trend line support in order to get a sell signal. So bullish until proven otherwise. Microcaps. I don't trade microcaps for the most part. Every now and then I'll throw in, like, we did that COE one. We grabbed that one. I don't even know if that's a microcap, but penny stock for sure. We grabbed this trade, this little pop right here. That's all, but I don't. For the most part, I try to stick to the high liquidity positions where I can put larger size positions on, and I don't risk a whole lot. The small ones, yeah, I'll throw like, I might bet $1,000 or something on little tiny ones, maybe 2,000. I don't do a lot, but you don't need to do a lot because you can make $2,000 in like 2 days on just one little position. All right, so moving on. MSOS. All right. MSOS. What is this one? Cannabis. Yeah, I don't know about these cannabis trades. I feel like they just had kind of their moment in the sun over the last couple weeks. I did trade Tilray. I caught kind of a one-day trade on it. I didn't point it out in the channel, but I did talk about it in the day after. I'm not seeing that momentum in these things right now, so I'm not interested, to be honest. Look, you don't have bullish divergence. So again, look, take my course, okay? I'll help you find trades that will work, all right? Feeling like this is, and I just want to point this out. A subscriber said that it feels really oversold. Okay, well, that's your feeling, you know. Maybe someone else feels something different. We don't want to trade on hope and feelings. We want to trade on technical charts. It's going to give you the best probability and advantage towards making money. It also will keep your emotions in check, all right? You're trading off of a technical plan versus a feeling, all right? So there's no bullish divergence in the PPO. There's no reason to be long this or get long it right now. There's not even a setup, at least not yet. All right, so take the course. This, you know, I can tell you haven't taken it. You know, don't be cheap. Invest $99 on your education. I'm telling you, you'll make that up in one trade if you start following some of these things. I can't guarantee I can control your emotions and control every trade you take, but I at least can set you straight down the right path, all right? Again, these are concepts and skills that set me straight personally after I learned them. So, all right, moving on. RHP. Let's check this one out. We're just looking for trade ideas, guys, and all right, what do we got? Yeah, some negative divergence here on the RSI and the PPO. That's a divergent high here. That's your divergent high. You got the 200-day. Obviously, they're gonna, you know, the algos love to battle with the 200. I'd probably do something like that, you know. And I wonder if I can extend this out at all, just to, yeah. Let's see if this gives us anything. Yeah, maybe there. There we go. See that? Sometimes you got to just play with it. and you're trying to get the most reactions. All right, there it is, right at support on Friday. Okay, and you got the 200-day. I'd wait for the 200-day to go, to be honest. So here's the thing. You've got the negative divergence. I think the market's set up bearish. Maybe we gap down on Monday. I don't know if I feel that quite yet, but it's possible. The bulls see this as support, so they're gonna want to buy here. If we gap down on Monday, that's kind of a trick move, right? The bulls were saying, "Oh, let's buy," but maybe Monday you hold here, kind of chop here, and then look for the gap down is what I'm trying to say. That would be your sell signal. If you get that gap down, that's a nice sell signal because the bulls are wanting to buy at support. And if you gap down, all of a sudden they're like, oh, I'm trapped. It's a trap move. All right, it traps the bulls into losses. So if you see that, that's kind of, then you want to kill. Basically, it's time to go for the kill. And especially if you gap below the 200, even better. Just take out all support and just trap the late to the party, bullish money. All right, that's what you want to see. Because again, trapped money, if you're shorting, trapped long money is the best because basically what it does is all of a sudden they take the bulls take losses and they say, oh wait, something is wrong. The smart bulls who, well, you know, they're not, maybe they're looking at something different, but the smart bulls, they get out quickly and they take small losses. But the retail bulls, they hope, you know, they hope they're going to get their money back. So they hang on and they sell after, you know, as it starts to go down, then they start selling. So that's fuel for a short. You know, that's going to be your fuel for the move down. And as a short trader, if you're shorting, you know, you want trapped longs. That's the best. Okay, moving on. So that's that. The bottom of the bullish channel for the SPX, bullish channel. Well, let's look. I use SPY a lot, but you know, you want the long-term channel on SPX, then you're going to go to the weekly chart, and this is your 2020 lows. I mean, the one that I'm working off of is, I've got some long-term stuff going on here, but on the SPY, it's something like it's like this. It's like that basically. Right there. All right. And you got, you know, support. This is a weekly, so you draw that out. Support again. The reason why I like this trend line, look, every single break that you had was triggered the Fed. All right. So someone's watching this trend line, I believe, because every break, Fed got triggered. All right, they caused this. Then COVID drop. The COVID drop, COVID was known all through here. People knew about COVID. I was shorting right up here, even though the market was continuing to rally. The market didn't care about COVID, even though it was known. And then as soon as we started hitting major resistance, boom, that's when we got the technical drop. That's when the algos flipped. All right, so draw that out. I like that one. And look at where we're at now, you know. And look, last week we had another back test, and then, you know, support, resistance. All right, we should go lower. Google. Let's look at Google. If you're asking, you know, let's see, will Google bounce before we head lower is what someone wants to know. Well, we just had a bounce over the last couple weeks. I mean, the tech sector had a 12% rally in, 10 days or something like that? I'd consider that a bounce. So from my perspective, look at that weekly chart. And I'm just on the weekly, but look, you creep above the 200-day, and then boom, rejection. All right, so I don't know. I'm thinking lower prices, to be honest. Looking at the daily here. There's the daily. Yeah, you got a little bit of support maybe right here, kind of where we closed at. So there could be a bounce back. We could run up and try to test the 200 again. I don't know, all right? But Yeah, those are things to watch. My target's down here, though, 1855-ish. Look, that's your bull trend going back to 2015. Just mark this out. That's an outlier. That's COVID. That's kind of liquidity event. The Fed stopped that. So we marked that out, and we've got a more better trend line to follow. And I think we're heading down here. The Fed's going to, I think the Fed's going to continue to talk hawkish until the market gets down. Basically, the Fed's given the market a green light to sell off, which tells the institution traders and the banks, hey, scoop up all that money that we just flooded into the market. Because that's basically what happens. The Fed pumped a ton of money into the market, and retail was high. Every retail, they feel great. Most of them probably haven't sold. Maybe some of them have, but most of them still think we're in a bull market. And but the Fed's given the green light to the institutional traders. Hey, you can now mop up that money and go ahead and take some of that out. All right, because professional traders for the most part are the ones who short, and retail's just long 401k money and whatever. All right, moving on. All right, I can comment on some silver stocks. I know, Coco, you've been asking me about that in some videos. I'll just look at, all right, I'm long PAS, all right? So I'm long ASM, PAS, USAS, and I'm long some gold miners, but this is probably my major kind of just, it's a larger one, and I don't see any real reason to get out. Now, yes, there is some negative divergence that I've noticed, so I'm, zooming in, let me see here. See here, that right there. All right, let me get rid of this. Slight negative divergence, and there it is on the PPO. So we keep, that was a divergent high. And if we pop up and make a slightly new high, it will be another divergent high. But if we have a strong impulse rally, we're going to burn through this divergence and make a new high. Okay? So look for that. That's signs. But again, negative divergence is not a reason to just get out of a position, because you can always burn through the rally or burn through the divergence. And in a bull trend, you will oftentimes burn through divergences. So you don't want to just get out because you have divergence. It just puts us on, just kind of pay attention to it. And the trend line that I have is right here. Let me get rid of that one. It's basically right here, and we've had lots of reactions. So you break that trend line, and that would be a sell signal if you have that negative divergence. But if you don't have that and you continue higher, we're probably going to burn through it. I'm leaning that way. I'm leaning that we're going to burn through it, but maybe we don't. So if you break that, maybe we come in for this back test down here, and it's very similar to gold. All right, there's PAS, there's your downtrend, resistance all through here. Maybe we come in for a back test. That would be a strong buy zone right there if you get it. But if you're long it right now, I'd probably exit my long if we break this trend and then just buy it back down here. Okay, moving on. All right, guys, I'm just trying to... let me get to some of these super chats, guys. I do appreciate that. Just a nice gesture. XLF. All right, XLF is not that difficult for me right now. It's pretty simple. 37. All right, just watch that level. 37. All right, 37 and change, but basically just say 37. All right, and I've got a lot going on this chart, but if I clean it up. But look, I've got all these reactions here on 37, and I've watched XLF throughout the day, and I've noticed that they do try to defend that 37 level just on the intraday basis when we were down there, maybe back here when we were down there. So watch that level, and there's another reaction right there. You want to see a nice daily close, maybe an hourly close, but you start breaking 37, and that's probably it for the financials, and we're likely going lower. This, to me, looks like a big topping pattern. Doesn't have to be, but it looks like it. We've got negative divergence, which really started right here. That's your last divergent high. So see, you made a high, then you made a new higher high in price, but look at the momentum that matches up with it. There's a high, and then the new higher high in price, lower momentum, all right, on both RSI and PPO. That's negative divergence. That's momentum moving lower while price moving higher. And even if you short it, I don't short at divergent highs, but if you did, that was the perfect time to short. You dropped, you made a, came up, still lower high. Look, we're downtrending. All right, we're making, there's a high, there's a lower high, there's a lower high, there's a low, there's a lower low. People don't realize it because it's early, but this is the beginning of a downtrend. All right, so I'm thinking this. All right, I'm thinking we go down to 35. All right. Good support level down there, 35, and then maybe somewhere right in here. That's probably the next target, right in there. 35 down to about 30. Yeah, we'll just call it 35. Close enough. But again, it's the beginning of a downtrend. It'll be obvious to all after, But again, you don't make any money when everything's obvious to all. All right, you have to be early to make money because you're basically taking the people's money that realize it late to the party. That's the nature of the market. All right, moving on. And let me get to this other one, JNK. All right, so this is junk bonds, and LQD is real. I looked these up. They're kind of scary looking, to be honest. I was looking at those last week because I am pretty focused on the bonds right now. I'm seeing TLT just continuing to sell, which means interest rates are rising, and they're rising pretty quickly. That's not good. The market, when things happen quickly, especially when it comes to interest rates, that's where problems can come from. So I don't know what that's going to do. But again, that's why I'd rather be shorting the market than going long when interest rates are rising, at least tech. JNK. Yeah, so excuse me. See this low right here in JNK? Look at the momentum, lower low, okay? So downtrending momentum. You did have a bit, this was a divergence on the RSI, so kind of mixed signals. So we can't just give it, we don't have 100% negative divergence. And then we rallied in momentum here, and we rallied in price, okay? So there's no divergence. Momentum and price are moving the same, all right? So that tells me that there's no change in trend. The trend is down, and we're just seeing counter trend bounces along the way, but the trend is down. Okay, so, likely going to make a new low, and we'll see where momentum ends up in that move. Maybe you'll put in a divergent low on a strong move down, but right now, downtrend is what I see. Same with LQD, and then, you probably have some support. Let me see. There's something going on right here where we gapped up right there. So that'd be a target right down there at about 97-ish, 96, 80. If you're shorting it, you don't want to wait for the exact penny, but yeah, we should head down there. All right, that's what I'm thinking. Nothing's going to guarantee that I'm right, but that's my analysis on that. All right. All right, moving on, guys. And I'm trying to just pick one from each person, so please just limit your picks. Hey, Chris, thanks. Appreciate that. Chris says I've been the most accurate YouTube stock guy. Well, not always. I can't, I get some things wrong. But again, that's why I teach in my course risk-reward ratio and kind of position sizing, all right? Because I don't have to be right 100% of the time, and I won't be, all right? But if we're taking trades that have good risk-reward ratio, the ones that we are right on, we make a sizable profit. The ones we're wrong on, we take small losses. We stack the profits over time. I'm having a really good year this year. I know the market's down a bunch, and I'm up big. So hopefully you guys are up at least on some of these trades. All right, so AMD. All right, so that's a semi, and I'm short semis. I'm not short AMD. I'm short TSM, but look at that. That's interesting, huh? Let's take a look at this. AMD on Friday. All right, I got to narrow this one down a little bit just to see if I've got my chart right. Not a huge breakdown, closing obviously. Let's just tighten this up. Look, I can't say we broke it because there's the potential. You want to give it the benefit of the doubt. So as I zoom in, grab the tool. There was a spike low right there. See it? So there's AMD. Let me mark that out. Spike low there. Now I only have 2 reactions, but again, we're so close. Just give it the benefit of the doubt. And there's the low there. So zooming back out to the daily here. Right here. All right, so we closed what we could say is right at support. All right, let's just give it the benefit of the doubt. You're close enough. You don't want to jump the gun. And we break that, and basically break right where we closed at. We gap down or whatever. Then yeah, we should head right down to this level. I don't see much. I don't see really any good support. And look at this. This is interesting too. If I roll this out, see this right there. See how that lines up? Right in there. It's basically the top of this range. All right. I've got this big sideways range. We broke out. If we break back within this range, which is pretty much anything substantial from lower from where we're at right now, we should head to the bottom of the range. And the bottom of the range is 74, okay, give or take. Probably get a reaction there. So maybe you gap down and just boom like that. All right, should get a reaction there. And there's the thin zones, though, right below the bottom of that range. The thin zone being that, see how there's no trading days? It's just like gapped up, just shot right through this whole little area, and there's just no trades. You enter below that, you enter into that, we should head right down there. So that would be a really good target for me, which would be about 59 bucks. All right, let's form a resistance. So here's how it'll probably go. If we gap down, it's probably going to go down like that, do a little bounce, maybe halfway through the channel, and then flush down, and might be about it. All right. All right, moving on. All right, so UPS, obviously, I'm short this one. I talked about this in my channel. Someone said someone shorted it on Friday. No, not the best position. But so again, the sell signal came on April 5th, whatever day that was. And, selling ever since. So if you shorted at midday Friday, you're kind of chasing a little bit. It could rally like that against you. So just, maybe you got to be prepared for that. I don't think it's going to do that, but it could. All right. I think what's more likely, let me just point out what I think is going to happen. What I'll be looking for is probably this. Maybe gap up on Monday or just rally up into resistance, 1 or 2 days up here, and then down we go. All right, and there's a gap to fill, and but there's really good support right down there at 177.50. So I think that's our next bounce target, profit target on the short. But we could rally into resistance right up there. Okay, moving on. Shop. I didn't know that was a Canadian company. Yeah, I think we got lower prices on this one, guys. I've had these levels marked out for a while. We undercut this one, but I don't know. Maybe down here, 286. It seems like decent support to me. Support through here. Didn't quite get it there, but yeah. I think we're heading lower, to be honest. Look, if the market's going to sell off, the market, the large cap tech stocks have barely sold off. You look at Apple, it's almost near the all-time highs. So if you're going to get a sell-off in those, these things should continue to make another leg lower. Okay. So that's where I think it's going. You're at some support right now. See this? Little bit of that was resistance and then support. So you're at support right now. So maybe they want to battle with this a little bit. I think that's probably likely they'll battle with it right where we're at. You break basically the lows of today, a nice impulsive breakdown. That's your next sell signal, and that should bring you down to this level. 287. All right. All right. Scrolling down, guys, just trying to all right, so all right, Boeing. Downtrend. Boeing's in a bear market. All right. So there's your highs. Set 2019. Downtrend. That's it. You know, you had a big collapse. They rallied it. Where'd they rally it to? Basically right up to the trend line. They didn't even quite get there, but, you know. So, you know, you've got negative divergence that was building right here. These were divergent highs. I just see a downtrend. That's all I see. So, just let that play out, you know. Not anywhere I'd want to take a trade on it. I wouldn't want to short it. I wouldn't want to go long it because we're just not in any key level right here. But, you know, and there's this gap to fill. So if you want a near-term target, probably down there. See that gap? 158.86. I'd say it's pretty obvious at this point, especially how they dipped it down like this and stepped in early, rallied it, and now they're heading back down. They're going to go fill this gap. That's your next target. If you're short, that's probably where I'd want to cover, at least in the short term. And that's likely where you're going to get a bounce. Okay. Moving on. XLU. Let me look. No. XAU's off to the races, guys. Not even a divergent high. See, new higher high in momentum. Bullish. I wouldn't fight that bullishness. You might get a back test, but it's bullish. So I would, you know, that's it. And that's utilities. That's a defensive sector. That's screaming recession. This is basically saying we're going into recession. That's what this chart tells me. All right. All right, I already covered Boeing and Google, JW, so URA, all right? URA, I'm getting through some of these. Uranium, is that what we're looking at here? I mean, in general, I'm bullish. The commodities, they've been strong. We caught those early. You know, you go back and look at my November 2020 or maybe it's November 2021. I don't remember. Yeah, November 2020. That's where I was really bullish on the oil stocks. Nobody wanted oil stocks back then, and I was pointing those out exactly when they were bottoming. So now everybody loves them. On this one. So look, up here you had a divergent high. See it right there. That was your cue that, okay, probably going to break trend. Look, I don't know. I guess we broke trend and we're back testing. Right there, there. Look, if we're going to go into a recession, I don't know if we are, but I think there's a good probability. But if we are, the only thing I don't like is how everybody's talking about us going into recession. That I don't like that, but then these are not going to do well. But, yeah, so I don't know. I guess I see a back test. If it recovers, and that's one thing, though. Commodities, maybe it's going to recover the trend line, but I don't know. What I would probably do is this is what I would do. Exit the position, and then if it recovers the trend line, you can get back in, because this would be a false breakdown, which is very possible in commodities, but I know this is kind of an alternative momentum name that people are trading on, the energy play that's going on. So who knows? Wheat, I'm probably bullish wheat, but I'm just staying away from wheat because of the Russia thing and just the volatility around it. It's just, we'll look, I want to find the ones to go long on when nobody's paying attention, all right? When nobody's paying attention and things start to turn and they start showing us signs of whatever, of a move, well, that's when we want to get long on. Everybody's focused on wheat right now. The momentum traders, everybody. So I'm not interested in that. I'm interested in the things that when people aren't paying attention is where you make the money. All right. That's called accumulation. The smart money accumulates and gets positions when nobody's paying attention. All right. We want to follow that. Tesla, AM. I already covered AMD, Kevin, HYG. That's bonds, right? HYG, that's the corporate bonds. Yeah. Yeah, down. Look, you don't have bullish divergence yet. It's could be if you keep going lower, you might have it, but you don't have it yet. So again, HYG right here. This looks like a target to me, right about there. All right, it's roughly 78, 79, somewhere right in there. I already covered JNK. You can go back and look at that. Look, the stock market can go down a lot. We don't know. Amazon is a sell. That one looks like a... I think the Amazon's hit its end of its bull market. All right. I'll just tell you why I think that. Here's your weekly chart on Amazon. Here's your 2009, 8 lows, whatever. Support, support, zooming in. Big sell signal right there. See that big red candle? Boom. Big weekly breakdown of that trend line. And also, look at the battle that's going on. You break it, and oh, it's this battle. So clearly, this is a level that people are watching. All right? But look at where we closed this week. All right? So you can't say for sure that we're going to not recover it, because obviously, maybe they do. But just go with the other charts. Look at the probabilities. Right now, it looks like we're breaking. And, you know, obviously, you take out the lows down here at the weekly, and it's very obvious. So there's my target on Amazon, 2040-ish, all right? At least in the short term. Resistance through here, that should be some support. Probably get a bounce there, but I think we're heading down there. And if Amazon does that, I think we'll hit our targets on Qs and IWM. All right, let's keep going. I'm getting down to the bottom of the list, and then I'm going to wrap up. Just about time. Lows. I'd probably be bearish on that one. Let me see though. I haven't looked at this one for a while, but I know that look, you're below the 200-day. You're clearly downtrending. All right. Look how they held the 200-day. Look, hold the 200, hold the 200. These are algos basically. So there's it's a bullish trend, and you know, I had a trend here, but obviously I think I just was like, well, this thing, we give up on this while the chart's kind of messy. But now we got this, and we got this, and let's see where that connects. Yep, see that? All right, so that looks like it connects down here too. Yeah. All right, so look, support, support, support. You know, you had a bounce, so that's a reaction. Even held it here. Finally broke. It probably came with negative divergence. It did. See, it really started here, but clearly right there. All right, there it is on there. So see, higher highs, divergence, negative, less momentum. All right, that's not a reason to short, but it is, you know, and you know, sometimes what I'll do is mark out the hourly or just get on the trade early, like something like that. That you can do that. But the bigger picture is boom, right down to support, bounce. Now we've lost major support. All right, the bull trend that comes off of 2020, resistance. Look at that rejection right there at resistance. Boom. That's where you want to short at. You don't want to short down here. You want to short right there. You know, a rally into resistance. That's objective, low risk. All right, now we're down. Maybe we bounce to the 200. I don't know where we go in the short term, but I know that this is a clear downtrend. All right, so, you know, you could start to maybe mark it out, but we're making lower lows and lower highs. We're downtrending. So now you're just going to want to mark out your reaction lows. There's right there. Somewhere right in here looks like your next, you know. So, yeah, I think we're going to just work our way lower down to, you know, lower. Over time. There will be bounces along the way, but PayPal. All right, guys, I'm just going to wrap up these picks. So drop me a thumbs up if you haven't done so. We got 100 people here. I got 58 likes. I should at least have a like from everyone, guys. Let's click that like button. I do appreciate that. I just gave you an hour of my Saturday, so I think you can click a little button. I think that's fair, right? Not too much effort. All right, so PayPal. Yeah, so lower, guys. All right, I think PayPal broke its bullish trend. Here's the trend on PayPal from 2016. All right, on the daily chart, support all through here. COVID lows hit exactly at support. Gap down. I'm surprised that we didn't have a reaction there at all, which is kind of interesting. Maybe that just shows extreme bearishness, but not good. All right, so we broke it. Okay, we could rally back up, and I guess that's why I have that circled. That there's definitely potential there to rally up. I would be looking to short at that resistance level up there at 133.40. I don't want to take a position in it here, but I would say bigger picture heading lower, although in the short term could rally up to that resistance level. All right, and if, yeah, that's it. Again, the Qs will probably be your signal, but we're probably, if we're going to rally up, maybe we rally up, hit that, and then head lower. But ultimately, you've got lots of reactions down here, so we could head down there. It really depends on the Qs. Where's PayPal at when the Qs, if we're going to go lower, does the Qs and the other indices start hitting their major supports, and where's PayPal at that point? But I would say we're likely going lower. We're probably going to go take out these lows, and maybe the Qs are down there at their support level at that point in time, and that's the end of the move down. But that's what I would say. In the short term, though, could rally. Again, I'm not interested in a position here. All right, if it rallies, I'm interested in a position here, not right here. But if you're in it, then I would just say lower. All right. No. I don't trade options, guys. I don't give suggestions on options. Again, I just I think calling the direction's hard enough, So I'd rather bat singles and get the accuracy right, and calling options, although my trading strategy oftentimes can get the direction right, I don't always get the timing right, Sometimes things will be profitable, but they're not just, sometimes they'll just like grind around and they're profitable but not really making the move yet, and they those options can expire and then the move comes. So you're gonna have to find someone else for options advice or opinions or whatever. I don't give it. All right, take it easy, Coco. All right, let's I'm gonna do two more and then I'm gonna wrap up, guys. Hey, nice, Mr. R. You made 20K. You took my course and made 20K on a trade using what I learned last week. See, there you go. I charge $99 and you make 20K. That's that again. I'm not, I didn't even, the course, I didn't have a course when I started the channel, and I had so many people asking me to put one together, and I was kind of hesitant at first. I finally did it. And I just didn't want to give it away for free. I don't think anything of value you should give away for free. All right. And my time's not free, but I didn't want to price it. I know some of these other guys like Mir Barak and stuff, they're charging thousands of dollars. And, I've looked at Mir Barak's strategies and stuff, and I think it's okay. Like, I don't think there's any problem with his style. It's a specific day trading kind of style. And oftentimes you got to have he likes to tout how much money he makes, but you look at the position sizes that he takes, it's like sometimes it'll be $2 million position sizes. And so the percentage gains that he makes are oftentimes very small within that one little day time frame, but he has such huge positions that, he makes a lot of money. I don't think he's, as far as I can tell, he's not really running a scam, but that warrior trading, I don't know about that, guys. I looked at that and I was like, this dude, there's something going on with that guy. Comes across as a nice guy, but I'm telling you that there's something going on there, at least in my opinion. All right, so I'm looking for a couple more, and then I'm going to wrap up. So how... Sorry, I'm just scanning these. I don't trade futures either. I could turn my account on for futures, but I don't do it. I stick to ETFs. That's individual stocks, ETFs. I'm not afraid of trading individual stocks. I do it all the time. I point out the trade ideas all the time, but not the futures. No. But I do look at futures. I read the futures. I read the charts. So keep those up on your charts too. That's important to look at, especially ES and NQ. All right, you want to see what the indices futures are doing. I look at oil futures, gold futures, all the futures of things I'm looking to trade. I'm always watching, but I don't trade them specifically. Hey, there we go. Someone lost all their money in the stock market and made it all back after watching my videos. Nice. Well, I appreciate that, especially this year. I know that, this year has been, really solid. And again, I've been looking for a bear market for a while, and it's because of the charts. All right. It's basically because of the SPY chart, but the Fed's been, reinflating the market. So it's, but maybe they're not going to this time. I don't know if they will or not. We're just going to trade the charts. All right. When we start seeing signs that we're bottoming out, then we'll just probably look to exit these short positions. But I went into the weekend pretty short. I'm definitely heavily short. It was a very profitable week for me specifically, but when you look at the trades that I've been pointing out, they're all profitable. So there you go. Visa. Yeah, we'll cover Visa. We're going to wrap up here. I've actually gone a little bit longer than I'd normally like to, but does Visa pay a dividend? A small dividend. Sometimes these dividend stocks will just kind of hold up. All right, I got to go to the weekly chart to see what I had on this one. All right, so there's your bull trend. Apparently I marked it out with my little drawing tool, but we can use a line tool. Right there. All right. Bull trend in Visa. Longer term bull trend going back to 2009. Okay. There's your COVID lows. Little brief dip below. Bear trap, basically. On the weekly chart. And look, that breakdown on the daily most likely came with bullish divergence. It did there on the PPO. Not on the RSI, though. So, yeah. Would have been, it's a little trick. Excuse me. See how we're chopping through here? It's a battle, it's getting whippy. I would just take the chart at face value on this. If you break this trend line, then, with a nice solid daily close, take that as a sell signal. All right. If you take a short right here and they rally it up and recover it, stop out. All right. Take a small loss. Risk, something like that. But otherwise, I would just take it at face value and say, okay, if we break, it's a sell signal. We should head lower. You can look at the other charts like Qs and stuff for maybe additional signals. Or XLF, actually. If XLF breaks 37, then, you might get that solid sell signal here. On the daily chart, you've got, let's see. You don't have really, you had there's your negative divergence. Sorry, it took me a second to see it. Right there and there. All right, so this last high here, that's your divergent high. But we're back at that major support line. This is like the long-term bull market support line. So you need to see that go on, you know, with a strong sell signal. I have to admit, they probably would have got me there, you know, but, you know, again, I just wait for that daily breakdown and then just take it there and then just stop out if they can recover it. That's how I would treat that one. You had bullish divergence on the weekly. See that? Wow. Divergent low. Bullish momentum. So, yeah, I don't know. It's at support, so nothing to do. If you're long, I'd probably just stay long, but you get that sell signal, maybe exit on that one. All right, one more, guys, and I am going to wrap up. All right, let's go with Lennar. I see someone wants Lennar. I don't know. It's kind of boring. Maybe there's something going on here. The home builders, I mean, look like a sell. I mean, but there's some support. We're at the weekly. Let's jump down to the daily. So here's some support on Lennar. Yeah, good support there. Resistance, support all through here. Okay, and we're basically at it. All right, just the other day we were basically at it. Haven't quite hit it, so maybe you're going to get a complete tag. But again, it's not like you don't want to short right here. You got big support right down here. So if anything, I'd want to be maybe looking at a long. But the other thing is, you know, I don't see any bullish divergence. Let me narrow it down. I don't see it there on the daily. Potential divergence here on the daily right here. See that? It's potential. Looking at the hourly, you probably have bullish no, you don't, actually. Interesting. So probably going to head down and actually make a tag of that level. Maybe even undercut it. So what I would look for is a move down to that level. I think that's likely. That's about 71.50, which is another, it's not much, but it's about 5%, 4.5% down. And then you're probably going to undercut it maybe a day or two, and you'll probably get bullish divergence, and maybe you'll get a bounce down there. All right. But if you don't get the bounce and you just cut through, well, then, you know, it's lights out, and this thing's heading down to probably this level, 57. All right. So big support down there. I'm not interested in shorting it, but I would be interested in shorting on a big daily close below, as long as there's no divergences there. Or I'd be interested in maybe going long for a bounce trade, as long as we have divergences, you know, down at this level. What the best setup for a long trade, which is where I'd be more interested in a long trade in the short term, just because of this being key support. What I'd look for is a break below and then a recovery, and look for those divergences to be there, bullish divergences. All right, and if you get that and you get that recovery, that would be a buy signal to me, and you're probably going to get a bounce trade, you know, maybe up to 81, 80, you know, I don't know. Let's look at the levels. Yeah, we'll just say gap fill. All right, there's a gap right here. So we'll probably go with that up to 78.66. And that would be from this area, if you took the trade right there up to there, about 10, 11%, 10.5% bounce. All right, that's what I'd be looking for on that one. Okay, guys, that's all I got. I've gone for about an hour and 15 minutes. So check out the course if you haven't done so. I think there's value there. But if you're not interested, no big deal either. And I will catch you guys on Monday. Good luck.